Joining me right now, RaeAnn Mitrione, partner of Callan Family Office. Thank you for being with us. So some of the commentary, I don't think anybody's so surprised because we've seen these strong prints when you had 3 months in a row of a CPI stronger than expected. Not surprised to see comments like from Powell, it will likely take longer for confidence on inflation, appropriate to let policy take further time to work. So they're not seeing the progress that they anticipated. So as a result, you got to wait for the cut. Is that right?
Yeah, I mean, they've been very, very clear the whole way along that they're going to be very data dependent. They're not going to act too fast, and they want to make sure that they're seeing progress so that, they don't act too quickly and potentially end up in a scenario where they have to reverse course, which, would be a really bad thing. So the last few months have not given us the data in the right direction that we wanted to see. We're still substantially lower than we were last year. But yeah, I mean, the market is digesting the idea that we're definitely going to be waiting a little bit longer with rates much higher. And, we've seen yields back up as a result.
I mean, would you be in the camp that we'll get one cut this year or maybe even none?
Yeah, I mean, I think we're looking a good bit farther out, and one is probably reasonable if we start to see some progress and we get, some inflation prints. They're going to want to see at least a few months of progress. So one is probably a reasonable expectation, but if we don't see that progress, I certainly think none is a possibility.
Yeah. So what else are you watching? Because thus far, we've already gotten in some earnings. The market has been extremely choppy. In fact, the volatility that has occurred here in the second quarter, so different than the trading style what we saw in the first quarter. Would you agree? And what do you make of it?
Yeah, absolutely. I mean, we started off with an incredible start to the year. The first quarter was very strong, and the last couple of weeks have been very different. As we got this third kind of set of inflation numbers. Yields started backing up, and even though we're still seeing some broader market participation, it's kind of shifted. So digesting that higher for longer potential scenario and seeing more rate sensitive parts of the market have some weakness. So we've seen those technology and growth that's those longer dated having discounted cash flows at higher rates. Those valuations are being impacted. Small caps are being impacted. And it's to be expected. And when we're kind of trying to see what the path forward may be, the market wanted to price in, we started the year at 6 or 7 rate cuts, then it was pricing in 2 to 3, and now we really are kind of at a 0 to 1 scenario. And so we're going to see some volatility until we see some progress here. But it's also normal to have some volatility. This pullback, I think a lot of people were kind of waiting for it to happen.
Yeah.
And it doesn't mean that we're not still in a very strong economic environment, which is really kind of the reason why we're not seeing these rate cuts coming forward.
With this being said, and you don't see a recession, so maybe we'll let the rate hikes still, keep us in this restrictive policy. In the meantime, you're not seeing a recession. You did talk about the opportunities in private credit and venture capital. You're looking growth and value. Tell me a little bit about what your advice is now to investors who want to make some money. They're probably looking and saying, what do I do?
Yeah, I mean, the most important thing I think is to stay invested. I mean, we invest in diversified portfolios. We're staying closer to targets. We're not as overweight our equity allocations as we have been at some points. So we're more in line with our targets to equities, in line with our fixed income targets. We are pretty balanced between value and growth. I mean, growth and technology had such a run. We've pulled back on that to some degree, and our value allocations are a little more on the defensive side right now, more with the staples and healthcare type sectors that tend to be a little more defensive rather than cyclical. But yeah, looking at other opportunities. I mean, since the banking crisis we saw last year, lending has dried up a good bit, and with coupling that with the move up in rates, there are a lot of opportunities in the private credit markets. We're seeing a lot of venture capital secondaries trading at discounts. I mean, there are ways to diversify your portfolio, and you can have that fixed income allocation that a couple of years ago you really weren't earning anything. You can earn something in bonds now and take a little bit less risk. And wait for the opportunity, because when the Fed does start cutting rates, it may be farther out from the future than what we had been expecting. but that should be a natural tailwind for stocks when that happens.
So it sounds like you're a fan right now of a diversified portfolio, because you said some bonds would be a good idea. Equities, you remain constructive on equities, so you're not avoiding either. When you think about equities, could you break that down a little bit? Are we looking, first of all, are you looking at USA more than international? Is it large cap growth? Is it, technology, energy, healthcare?
Yeah, sure. Again, we're diversified within our equity portfolios, but we do have a strong bias towards U.S. equities right now, and also within that, a strong bias towards large cap. I mean, small cap valuations are attractive, but in a higher for longer scenario, there's going to be a headwind there. There's more floating rate debt in small caps, a lot fewer, 40% of the index is unprofitable companies. So where we invest in small cap, we invest on the active side. And then within large cap, I mean, we're balanced between growth and value. We still, while we've seen such a run up, in technology driven by all the prospects of AI innovation and what that's going to mean, we do think that's kind of a sustainable theme that's going to continue to play out, and we want to keep that exposure. But we are pretty balanced between that and having, stocks on the value side as well.
Yeah, understood. RaeAnn Mitrione, thank you, partner at Callan Family Office. Appreciate it, and good breaking down with me. Thank you for breaking down with me the breaking news from our Fed Chair, Jay Powell.